I'm Mike Lavin, the CEO of the Currency Cloud. We're based in London, and I'm a veteran of the financial technology industry, as much as one can be a veteran, in both Silicon Valley and in London, where I've gone back and forth. We automate B2B cross-border payments. I think what's very important is that we're not selling to end users. We're providing a technology platform, an API interface that we provide to a series of firms, which I'll describe. We provide everything that a business needs to automate and optimize sending and receiving foreign exchange payments in 140 currencies in 200 countries. The market analysis is quite simple. Foreign exchange, you get lost in the zeros. It's a $4 trillion a day market, but most of that, 3/4 of it or more, is actually the trading market. 1/4 of it is the deliverable market, or people where they're making payments. What's happened in the trading market in the last 10 years is a series of firms have come up. Carinex, the retail brokers, Gain, Saxo, many firms. And what they did in the trading market is they basically, they made prices transparent, they improved the level of automation, and they squeezed margin that was previously taken mostly by the trading banks and put it onto the platforms or returned it to the customers. That revolution in the currency markets hasn't happened in the deliverable markets, where the systems still resemble the systems that, I like to say, Ford Motor Company used to pay their bills at the end of the month. So what we're part of, and it's not only us, there'll be other firms approaching this and maybe in other different kinds of ways, it is a huge market, is basically taking that excess margin that's been squeezed out of the currency markets in the trading market and applying that same kind of logic into the deliverable market. We're live. We process about $2 million a day in payments, which is sufficient to be a beta. So it's a very solid beta. We do a few hundred transactions a day and about $2 million of payments. We have 15 customers. Let me just talk quickly about 4 of them. FX Match is an FX broker who has businesses as their customers. Typical customer does about $1 million a year in 12 to 14 payments. TransferWise, I think some people here know, again, a consumer-oriented platform. They match pounds and euros netted on their platform so that the cost of foreign exchange is 0. And then they hedge the stub amount with us. Fidor Bank has an e-wallet. So if you want to have a multi-currency e-wallet on their site, they're a German bank. The e-wallet, the currency conversion parts of the e-wallet are done by us. So it's a euro wallet. It's in Germany. If you're going to make a pound or a dollar payment, we do the payment. Send Cash Home is a very large player in the UK to Poland remittance business. Average remittance is 120 pounds. Guy comes in, he wants to send his mother a certain number of zloty. We serve a rate to a terminal in a equivalent of a 7-Eleven store, and the money ends up in Poland exactly the same amount of zloty as before. The advantage that that firm has, because they're using us, is they guarantee the amount of currency that's going. Usually in the remittance market, the end user actually doesn't see what they put in 120 here, they get some other number out the other end. So it's a very different market. Basil is a firm in Jersey that does corporate payments. So they do a lot of corporate services, treasury, and payroll on an outsourced basis. So we have right now remittance firms, wealth managers, and insurance firms. What we do is, well, we deliver end-to-end payment process automation. Very important that there's a single API to our customers. And I'll talk a little bit more about the customers, corporate service firms, card service firms, and financial services. The end users are their customers. One of the unique things is it's a single API. You can certainly get all of these services from other vendors today, but not a single API that connects them all. Integrated to the platform are compliance. Again, when you're dealing with businesses, there's a lot of KYC and a lot of AML, anti-money laundering and know your customer. We're integrated to a whole series of different liquidity providers so that we get mid-market rates. And again, we're totally transparent. We disclose all the rates with a disclosed markup. And we're integrated to a series of payment systems. Effectively, what happens in the cloud through the single API is the fact that we may be coming through one compliance vendor or a different liquidity vendor in a different payment and optimize the payment route. is transparent to you. You know what you put in, you know what you get out. On a competitive basis, and I won't go through all the lovely little checks and X's, but what the little checks and X's say is that that relative to the competitors, who are banks, payment firms, and currency brokers, we provide full STP of the payment. It's assumed in our market, and we're assuming, that rates will be low. So there's no competition based on rates anymore, from our opinion. And we also believe that in the pound, euro, dollar market, and eventually other currencies, perhaps yen and others, the cost of receiving funds and making a foreign currency payment will approach zero. There's no reason why those should be paying the same rates that are paid in the trading market. And if a bank or anyone else is charging more than that, there's no need. That margin will be squeezed out there. The edge that we have, we believe, is in the transparency of what we do, in the integration. And I'll just focus on the benefits a little bit more. And there's two that I really want to talk about. One is price security, and the second is the control of pricing. By price security, I mean, the way the platform works is we hedge per transaction. So on the Polish, in the case of the Polish plumber, he puts in his 120 pounds, we serve a rate at the terminal, and that's the rate that he gets. And then that's guaranteed to the firm that's doing the payment, and it's guaranteed to the person. It's the same with an e-commerce site, with a prepaid card, with a wealth manager. Because we hedge per transaction, we guarantee the rate. But we have a series of customers now that we're talking to in Scandinavia, which is very multi-currency. You've got a lot of euro payments, but a lot of Swedish kroner and Norwegian kroner suppliers. So you've got lots of currency confusion with euro volatility. It's not that people can't get cheap rates, they can get cheap rates. What they can't get is automation of hedging of the per transaction basis so that you get price certainty. So it turns out that certainty is actually more important than cheap rates. You have to have the rates low, but they have to be certain. If they're uncertain and cheap, it's not good enough. Second thing that's important is we're moving the point of conversion from somewhere in the process to closer to the transaction. What that's doing is freeing a degree of margin that's trapped in an inefficient system that's moving through multiple layers and multiple providers. That margin now goes back to the firm that we're doing business with, either the wealth manager or the card processor. They can either use that in terms of setting their own pricing to their customer. They can take it as a revenue line. I was with a payroll firm this morning who does a lot of euro payments out of New York. They process payroll for a lot of firms. When I asked them how they do it, they just take whatever the bank gives them and tell the customer that's the cost of doing business. That's great, but the customer gets overcharged and the bank gets a revenue stream. That revenue stream will go away. It'll be taken away by us, or it'll be taken away by somebody else, and it'll either be returned as a lower price in terms of the payroll run to their customer, or they may actually take some of the spread themselves. What we find is those two things tend to be very unique. Other people will try to offer automation. Again, we think we're better on the others, but the uniqueness is in the control of pricing and the security of the price. We go to market by looking at these three ecosystems. The way one starts is to sell as high into that ecosystem as possible, so you get the most transactions, and understanding the pain points in each one. Again, I won't go through it in my 5 minutes, but we've really worked out the workflow in banks and a lot of different options. We've worked out the workflow in the card services system, and we look at where the point of conversion takes place right now. And we move that point of conversion up closer to the customer. As I said, we power FIDOR and TransferWise. The model is transaction-based and highly scalable. We think that we make about $5,000 per million of payment value transacted on the platform. We could charge more now, but our assumption is that even in those areas where someone's paying 2% or even 8 or 10%, or someone's paying $12 to $15 for a payment now, we're going to charge them the price that we would charge them 3 years from now. So we're going to price down the learning curve, and that's how it becomes disruptive. But it's all about capturing flow and getting flow onto the market, onto the platform. You know, we're smart guys like everybody else, and but we put together capital markets expertise and platform expertise. The two technical founders, Nick and Nigel, come out of the capital markets. I've been in financial technology. I've been with two very highly scalable systems. 2 million foreign exchange transactions a day, and another system that I worked on, we did 1.20 to 30% of the New York Stock Exchange volume on a daily basis. Back before high velocity was not a dirty word. And we're in the process of raising our Series A now. We've got about half of it committed. The Series A was $8 million. We've got about half committed, and we're looking to raise the other 4. We believe that the Series A will take the company to cash flow neutral. We're generating revenues now. This year will be, last year, 2011, was $1.2, $1.3 million. This year will be about a little over 2. And the quality of the revenues is going up. Again, I'm looking at pricing way down the curve. I could price more now, but I look at part of the funding is allowing me to price down the learning curve so that I can build the volume. It's all about getting flow. Once you have the flow, then suddenly, because of the way the model works, you start to be profitable. And there could be other services that we could sell, but right now I'm not focused on any other services except doing the conversion payment as cheaply and as effectively and as widespread as possible.